Hey everyone, this is Brandon Rush. Thank you for joining us for another episode of The Agent Investor. The Agent Investor series is a series geared towards speaking with real estate professionals, having conversations about multifamily, commercial assets, and other real estate assets to allow you guys, our audience, to make more informed decisions. So we're going to dive right in. So today we have Sam Eddinger, or Eddinger, I'll let you pronounce it, from Ironclad Property Management here in Connecticut. Sam is a good buddy of mine who I've been working with over the last few years. He's given me great guidance, given me great mentorship, great everything. Thank you for joining us, Sam.
Great. Thanks for having me, Brandon. Hopefully try two in this recording works better than try one.
All right, so good. It's all good. All right, so we're going to dive right in. So Sam, tell us about yourself and how you involved in real estate.
Sure. So my family was in real estate when I was a kid. My dad was a teacher, a shop teacher, and during his summers as a high schooler and in college, he actually would build houses. And so we were always around it, my brothers and I. We were junking out houses, sometimes helping them paint, usually not as much. And so I saw this man on a teacher's salary really build quite a real estate portfolio, such that, people that you see him nowadays actually tell my dad that he's got the Midas touch, that not only does everything he touches turn to gold, but even the things that come out of him, his poop, also becomes gold. They tell him that he poops gold. So from the experience with my dad and seeing this and seeing someone that would be lower middle class, we were a lower middle class family, and now being a multimillionaire just because he did what was necessary, held real estate long enough, we saw it as a perfect vehicle and opportunity for us to invest as well. So I think four of my brothers, I'm one of five, four of my brothers have invested in real estate. My fifth brother can't because he's disabled and he'd lose his benefit if he did. And so we've all been at different stages of this game. I started buying very heavily back in like 2012 timeframe. I felt like the perfect storm where interest rates were low, housing prices were depressed, and you had people that were losing their houses that needed to rent. So rents were moving up. And so I saw it as a perfect opportunity to buy. A few years ago, I started a property management company. My background's in engineering. And so because of that, I really am passionate about process, things like that, to try to make things more efficient. That's just in my nature. So property management and process, usually they don't mate that well together because most people that do the work of property management are more about customer service and caring and not as much focused on the process. But that's really changing in our industry right now. So.
Got it. Absolutely. Thank you. I'm going to go off script for a quick second. So you mentioned kind of starting to heavily invest in 2012. So comparing that time to now, if you were to just be starting today, how would your outlook be? Not to get too deep into it, but I'm just curious how your mind was then and versus how it is now. Seeing how did you identify that was a good time to invest versus everybody's asking now, should I wait? Should I jump in? X, Y, and Z.
Yeah, I think the reason why is, for me, there's always a floor in real estate. And the way I define it, I think uniquely, is real estate is energy plus materials that are worked by a person. And you could say there's land as well. And so when I looked at the real estate market and I was buying single family homes that really didn't need renovation for $80,000 and $90,000 a piece, single family homes I'm talking about.
Wow.
And so part of my thinking on it was, man, you couldn't build this for $80,000, right, in this condition. And so I was like, well, it has to go up because you couldn't build it to this level, right? And so that was a lot of the mentality. A lot of it in Connecticut was depressed because of the fact that we had this exodus of people. And that's why we really didn't come back in the price of housing like Arizona did, Las Vegas did, Florida during that period because people were leaving. But I felt like all of that was already priced into our market, right? Yeah, it wasn't going to go up quickly, but if something happened, then eventually things would go well. I also really had a big hypothesis that all the money printing in 2008 was going to cause significant inflation. I was wrong on that one, right, ultimately, and it didn't take till 2022, 2023. But my hypothesis was, well, if I buy assets and I finance them with debt, then I basically make that much more on the delta, right? Because everything would go up, rents would go up, my expenses would go up, but my debt service would not go up because it was fixed for 30 years. And so the more things inflated, the lower as a percentage my debt service impact would be. And so that was a lot of my hypothesis. And so like a lot of people were calling me idiots because, I was buying single family homes and investing them. I did this before all of the big players like Blackstone and others really were getting involved in it. And like I said, most people thought I was stupid because, you got to buy for cash flow. You got to buy for cash flow. And I said, well, I get cash flow for this one, maybe not as much as a multi, but I got a lot more appreciation potential than these multifamilies that are really focused on investors. So I wasn't competing with moms and pops. Like flippers were not loving these. I bought them all on the MLS.
Yeah.
I wasn't even a realtor. Gave a whole bunch of people commissions when I was buying at that point in time. So
got it. Good. So as you all see, Sam has a wealth of knowledge, even outside of his property management. He is a true investor. So definitely another time we'll probably do a whole nother episode we could do on just deal flow and all that kind of good stuff and properties and whatnot. But let's dive back into property management. So as we spoke about, Sam does own Ironclad Property Management. We're going to talk about what is the value. First question, what is the value of utilizing a property manager that, the masses should know about?
Yeah, so what I would say about that is like we actually prefer people to have done self-managing before having us manage, because so many people think of us as rent collectors. Oh, you're just a rent collector. And until you've actually done it day to day and you recognize how hard it is, then you recognize the value of property management. So we actually prefer people to self-manage their first properties. There is a perspective in our industry which is completely false, a narrative that real estate is passive. There's aspects of it that are passive. If you buy a really good single family home, you might not have to do too many interactions with a person, but there's aspect components of it. If a person is late on rent, you have to be actively trying to collect rents. If all of a sudden they're not paying and or there's maintenance requests, you have to actively be finding vendors, dispatching them, coordinating with the tenant, getting the invoice and paying. All of that takes a lot of time and effort. And so the value of it is really in a few places. One, you can make your investment passive. With a property manager, then you ultimately don't have to deal with all of those day-to-day headaches. The second thing about it is, and one of the things that I might want to talk about a little bit today, is changing laws. There's a lot of changing laws going on in Connecticut right now, and it's hard to keep up with all of these things that we're going to have to do as owners of real estate. And so having a trusted partner who is active in the legislative process and is actively trying to oppose bad laws and is knowledgeable about them so that we can make sure that we continue to be in compliance, especially in today's day and age, is a very important part of the job that I do as a property manager.
Got it. Absolutely. And so next one we got is when someone's ready to dive in and start using property management, how do they prepare for that? What questions should they be asking, whether it be you or any other property manager, in order to prepare or vet out property managers? How do they prepare?
Yeah, so I think the big thing with property management companies is it's like anything else, but in a way it's different. So it is transactional. We are providing a service for a fee. But the difference in it is, whereas a person that is dealing with a person on a buy or sell, that transaction is pretty fixed over a 3-month duration. So I think in that regards, what is transactional in nature can become relational. And so it's really about whether or not you know, like, and trust the person. If you do know them, that you like them and you trust them, then ultimately you're going to have a better relationship. A lot of the people that I end up interacting with, they ultimately come to us because we're a little bit more high touch. We try to provide a higher level of service, and we try to provide feedback in a timely fashion. I hear so many complaints of people, I couldn't get in touch with my property manager. And so what we're doing really is we're trying to build a company and an ethos that's more about providing great service to our residents, to our owners, and to the vendors. Because if we give a great service to our residents, they stay longer, and then the owners make more money, because we all know that turnover is the enemy. With vendors, well, now they're going to be willing to roll on a property that I need them to, and I can kind of get them to do things on a tighter time frame. I can kind of manage that a little bit better. And then with respect to the owners, in doing that and in providing that great feedback, they'll be looking to stay with us longer. So I really feel like this is the next stage of property management, is being super client-centric and trying to focus on providing high levels of service. So that's for me, but other people, they think of it from a perspective of, I just want the cheapest person, right? Mm-hmm. Because, all you are is a rent collector. What you will find is a lot of people that go with the cheap property manager, after they end that relationship with the property manager, frequently they're not going to another, they're selling. Yeah. It's because of that negative experience that they've had that our whole industry has a little bit of a stigma associated with us. So that's what I would say is you're really looking to see what you want. Some people are looking to go low cost. I would say with low cost comes low quality. And so I'm not at all saying that I'm inexpensive. We like to be priced appropriately for this level of service that we provide.
Absolutely. So you get what you pay for, just like anything in life.
That's true.
It's simple as that. I've heard a lot of owners making comments such as, no one will manage the property like you would, which to a degree is true, but to a degree is still true. But what are your thoughts when you hear that, or people approach you, or you just hear that?
I think in some cases it's completely true.
Yeah.
I had an owner that left us because we did not provide a level of service that he wanted. He only had 2 properties and 40 units, and he was retired. And so, in that regard, if you are a very proactive property manager or self manager, and you are doing all those things, you're doing rent increases, you're doing property reviews yearly to make sure they're maintaining the property, you're calling vendors to continue to facilitate relationships so that you can have them work on your property, you're building that relationship with your tenants as well. I think you can absolutely do a better job of self-managing than I could, because I have to scale it and try to be fully utilized. And so I have to make it so that my price per hour is relatively affordable, whereas you can kind of use as many of your hours as you need. In that way, though, that self-managing person is very active in it, right? So you can't make it passive if you want to do self-managing well.
Got it. Honestly, if you're going to self-manage, you almost have to be a professional self-manager. You can't go halfway in, because there's too much risk. At least from what I understand, there's too much risk involved. If you try to self-manage half-assed, then you don't know everything. Especially, like, we'll dig into it, but like, the laws are one of the most important things you need to understand, and really that requires upkeep and reading and keeping up with, just staying on top of it, because all it takes is one mistake and it can be detrimental to your investing. But next question I have for you is, a lot of owners that I meet in passing or just through calls or whatnot, they say, oh, I'm like, why are you looking to sell? I'm just tired of managing. Why don't these owners just transition into property management? It is a thing of that it's just like a pride of ownership, and I do not need that, and I would rather sell. Or what are your thoughts?
So my thoughts on it is actually a lack of knowledge, right? So there's some percentage of our population that had a bad experience, right? The vast majority of the population don't even know it's available. Like,
Mm.
it's not really well known especially in Connecticut. So I would say, I get a lot of calls from people that are looking for a property manager, and they say, "Oh, do you do landscaping?" Like, property management companies, a lot of times they're landscapers, and they do snowplow services. And that's because in the big commercial space, that's mostly what they do. Or if you're in the HOA space, that's mostly what they do. And so I think historically there was not that many professional property management companies.
Mm.
If you think about it, I don't believe there is a single publicly traded property management company. There's
Mm.
REITs, there's ones that like do some management, but the asset is what really defines the value. But there's some that might eventually come on the market, but there's really a lack of knowledge that property management is even a viable option. There's something like the percentage of people that own investment property that self-manage in different parts. I think in Connecticut it's like 90%, with the exception of the really big players
Yeah.
that end up taking a disproportionate number. If you look at just removing those, and frequently those they self-manage themselves. So like these are the ones like the Grant Cardone ends up buying establishments. But like when you look at it, the number of small moms and pops, the vast majority of the inventory is done by them. And I think it's just because they don't even know that it's a possibility for a large part.
Yeah, that's something I've never thought about. That I guess it depends on your generation when you came in, because I'm sure 20 years ago or even 30 years ago, when people were buying property at that place, it was common ground to manage yourself. You buy a
Yeah,
few.
my dad's been actively managing his entire time. Like, he doesn't even have me manage it. And my brother has a property management company too, and neither of us manage for him. Some people like to do it their way too, so some people want to control it. But in that regards, again, it's not passive; it's very active, and I think that's why people burn out, is because, I would say a market cycle is usually around 7 to 10 years. And so when you get to a point where you bought a property, and if you did like a lot of people do, or you buy in a hard place like Hartford or Waterbury or Bridgeport, and at some point you're like losing money, right? And so you're like, oh, and then eventually you get to a point where you're making some profit. People just want to get out. There's like, I'm out, I'm happy, I made some money, look, I'm a success, I didn't have to sell at a loss. It's all of that kind of, at that point it becomes a psychology. And that's what my dad did. He just proved that if you just persevere and you just keep going, like, you'll make a ton of money. So most people, they don't really get the full benefit because they don't hold long enough.
Absolutely. No, that's good. That's good. So we're going to dive into. So you tapped on laws earlier. Said we're going to probably we may get back to the conversation. But this question, I'm sure the laws tie into it. But any changes you see moving forward into the future that self managers or those considering property management really should start to consider as we move into 2024, 25, 26.
Yeah. So there's an interesting statistic. Australia is pretty much the most tenant friendly country in the world. And the percentage of units that are rented that are actively managed by professional property management is over 90%.
Wow.
It's flipped
Wow.
on its head. And so if you want like to deal with real estate, if you want to self-manage, then being very active in the legislative process is paramount because it's only getting harder for you to screen tenants, it's evict tenants, actually follow the lease and have it hold up in court, take possession back of your property. Like they're really infringing almost to the extent of you no longer have the rights to your property. With tenant unions, there's all sorts of things that are happening in our industry and are continuing to move into even areas that are historically red states. So it's moving this direction. You've got things like Biden is tenant rules or tenant laws, I forget what it's called. There's a lot of things like that that are going on that really the Democratic agenda is to push more and more regulations on housing providers.
Got it. Oof. Got it. Got it. And in general, anything else in terms of, or would you say the laws that are coming and will continue to progress? It seems like they're favoring tenants, not in a good or bad way, but just in general, it seems like they favor the tenant
Yeah,
more.
yeah. And the interesting thing about that, and this is where people don't really understand it, it's a spiral, and we're doing this tap dance. I actually think regulation is good to some level, and I would even say over-regulating is good. And the reason why is because I'm buttoned up in my processes. So how does regulation affect an owner? Well, regulation affects an owner in that evictions are longer, things like that are longer. It takes more work up front. It takes more work in general. I'm willing to put in the work, right? So if I'm willing to put in the work up front and in general, then I'm going to have an oversized percentage of the benefit. The cost is going to come through. If now more people are being evicted and it takes longer, well, rents have to go up. They have to go up fundamentally because for this game to work, owners have to make some profit. And
Mm.
so squeezing the owners in a different way with additional administrative burden and making it more difficult causes all of the rents to rise. Like that's a large portion of why the rents are rising so fast in Connecticut right now is these regulations are changing at breakneck speeds. And so the more that they push this agenda, the more that I feel like I'm going to benefit. And as a property management company, I'm going to benefit. But like it's making it harder. And so I'm still advocating against it because I just think it's bad laws that it's going to really hurt working class people. I think that the Democrats don't really understand the cause and effect. It's the really great tenants that are hurt by these laws because now they have to subsidize the whole.
Yeah, absolutely. Oof. Yeah, definitely something to consider and think about. Okay. All right. Well, that was a ton of knowledge. We're going to start to move and wrap this up, actually. So we're going to get out of the property management and the real estate, and we're just going to talk about what does Sam Eddinger enjoy doing when he is not managing his empire and his company.
You know me, Brandon. Real estate's my passion, and so like I love to talk about real estate. That's probably my singular focus in life is just doing real estate, interacting with people in real estate. I do have 6 kids. I have a lovely wife, and so I do enjoy that as well. That is a lot of my life is tied to my children and my family. My family is an extremely important part of my life, and continues to be. So I would say like those are my focus is build is doing stuff in real estate. My personal mission statement is that I want to help people be successful in real estate. And so I'm very passionate about that, whether you're here in Connecticut or whether you're in Florida or Texas or any other place that I can just build into people in a meaningful way about real estate. So one other thing I just want to add is, again, I think this is great what you're doing. And you kind of, I think, asked me offline a little bit about, if you were to do it all over or tell them something about providing a little bit of additional knowledge. Even in markets like this, I'm continuing to buy. I'm a lot more selective, but I'm continuing to buy. I would say there's no bad time to buy real estate, but there's bad properties to buy at bad times, right? So if you don't want to hold a property long term, don't buy right now because the market could go down, you could lose your shirt. But if you want to buy and you have a property that you think you're going to love and you might want to move into, or you've got, different things that you could do with it, like short-term rentals, and you have a vision that even if it doesn't work as a short-term rental, you're willing to subsidize it, you're willing to do what's necessary, you're going to make a lot of money, right? Mm-hmm. So I didn't make a lot of money back in 2012 and 2013, but now that it's 2023, I'm making a lot of money. So if you hold long-term, bad investments look like genius moves. Like my dad, he wasn't really a savvy investor, but now they say he poops gold, right? Like fundamentally, what is the difference? He had a courage of conviction and he held long enough. So that's the thing that I would say to anyone listening, aspiring to do real estate. Buy something that you're willing to hold long term. If you're willing to hold from one market top, which I think we're close to a market top, all the way to another market top, the next market top is always going to be higher than this one. So you're going to make money if you're willing to hold long enough.
Absolutely. And through you and other mentors and coaches that I've learned from, for me, it makes real estate investing easier when you can see it from that 7 to 10 year standpoint, because any decision you make now can be, whether it be a good or bad decision, or obviously a bad decision, but it can clear itself up over time just through all the benefits of real estate, the pay down, appreciation, X, Y, and Z, the cash flow. So for me, it makes real estate easier to stomach on making decisions. And it actually makes decisions easier for me because they're not impulsive. They're more, can I live with this for 10 years? If the answer is yes, then I can move on it, But that's how my mind works when I invest now, which makes my life a little easier. When I first got in, it was all impulsive cash flow, this day one, and so on and so on. And it was but now it's a bit easier.
And the cash flow game, like understanding, and I think you get to understand it a little bit more now, it's a tap dance. It's a game that people play, right? Is an 8 cap defined by a selling agent really an 8 cap?
Yeah.
No.
Yeah.
It's not, right? You look at it, if you want to do it, look for the property management expense line, look for the vacancy, the bad debt expense line, and look for the CapEx expense line. Those 4 expense lines are generally not in any pro forma or other listing. And so from that perspective, they're not real. Now I get why they do it, and that kind of because the market is not as sophisticated for investors, at least in Connecticut. So that allows people to kind of justify overpaying for property. I don't think what selling agents doing is wrong, but again, if you chase return, well, then you're naturally going to go to Hartford, Waterbury, and Bridgeport. It's not because you're getting a better return, it's because you're not appropriately putting in those 4 areas into your underwriting calculations.
Agreed. Nice. All right, so next question, again, non-real estate related, but how can people find you, get a hold of you? What's the best way?
Yeah, so you can call me on my cell phone. It's 860-254-7343, 860-254-7343. You can email me. I'm Sam, S-A-M, at ironcladpm.com. That's IRONCLAD, P as in Peter, M as in Mary.com. So either of those ways, I absolutely respond to any person that leaves me a voice message or emails me, because I'm trying to honestly help everyone in this community.
Got it. And what you are doing. And any final words for the audience before we take off?
No, I think the point is there's 2 levels to this: analysis paralysis, and the whole concept of instead of readying fire, just fire, fire, fire. So you don't want to be too much ready. You don't want to be too much fire. And so what you really want to do is start looking, do an evaluation of what you think, and then find a property that you'd be willing to hold for a long time. And even if you're overpaying by some amount, I think in those situations you're going to make out a lot better than if you try to, find something that cash flows like crazy, but it's in the worst part of some of these D-class areas of Connecticut.
Absolutely. All right, Sam. Well, first off, thank you so much for all that you've done for me over these years. I remember we connected through a phone call, I think almost 3 years ago, and now we're here, and you have definitely been part of my real estate journey. So thank you for everything you've done. And also to our audience, thank you all for joining us for another episode of The Agent Investor. We wish you the best in your health, happiness, and thank you, Sam. Thank you all. Until next time, we'll see you later.